Okay, we'll start this webinar as soon as I get dressed. It's the last session. Welcome everybody to the last Dr. Class Tuesday webinar of the semester and the year. We'll be back next year in probably a slightly different format, still to be determined. But these webinars have been fun. As always, I'm joined by my amazing co-chair, Francis Agopi. And you want to say hi?
Hi, everyone.
And also want to thank our Crack Dr. Class team of Paula Ibarra and Jillian Scales, who every week make these sessions work. A couple of housekeeping items before we begin. First of all, we do have translation into Spanish. So if you want to hear any aspect of the presentation in Spanish, just go to the interpretation button at the bottom of your screen. Maybe we have Portuguese. We have Portuguese too? There might be Portuguese too. No? Okay, just Spanish. Secondly, we'll be recording the webinar today, and we will have the recording available on the Dr. Class YouTube channel shortly after we were done. And third, if you have a question for our speaker today, we would love to hear it. Actually, not hear it. We want to read it. So the chat function is shut down, but if you have a question at any point during the presentation, just send the question to the Q&A function at the bottom of the screen. We have a session, we'll have a good 30-40 minutes of time to make questions of Professor Paniagua, and we'll make sure that your questions get asked, as long as they are rated PG or better. Okay, our speaker today is Victoria Paniagua, who is Assistant Professor of International Political Economy at the London School of Economics. Professor Paniagua's research lies in the historical and contemporary drivers of development and redistribution. She's a PhD in political science from Duke University just a few years ago, and her current book project, which is based on an award-winning dissertation at Duke, examines why, how, and to what extent economic elites influence developmental and redistributive policies, and with a focus, sort of a long-term look at the economic elites in Argentina and Chile. Her talk today, which is entitled "Insuring Against Democracy: The Political Economy of Premodern Elites Political Economy of Premodern Elites Asset Portfolio Diversification," definitely the last week of the semester. That draws from the book, her award-winning dissertation, and the book that is coming soon. So we're really excited to hear about Professor Paniagua's work, and I, clearly tripping over myself more than I ought to be, will step aside. Professor Paniagua, the floor is yours.
Thank you very much for the invitation to present my work here today. I am obviously very excited as a Latin Americanist, as I was saying, to be here with all of you. So I'm gonna share my screen now. Please give me one moment. Can you all see my slides there? Yeah, okay, 1 second. That should be fine. Let's put this on presentation mode. Okay, and I'm gonna minimize the screen here so that I see your faces. Okay, great. Well, so again, thank you very much. And as Steve just said, what I am going to present to you today is a working paper that summarizes some of the things that I am working on for my book project on economic elites in Argentina and Chile. And this paper or chapter starts from a very simple theoretical but also empirical motivation. And that is that in the literature on political economy and democratization, there is this considerable consensus that land inequality is a major impediment to democracy, right? So we have both classic, but also more recent works that explain that this is the case because land inequality affects landed elites' calculations during periods of transitions to democracy, and usually their willingness to accept or to reject the expansion of franchise. So this literature largely agrees on that landowners who, as you know, are particularly powerful in contexts of very high land inequality, are the anti-democratic group par excellence. And they offer us different explanations on why this might be the case. So we have a first set of works that explain that land is a fixed asset that cannot be shielded from taxation, and therefore landowners will fear that they will be either taxed or expropriated under a democratic regime. Then we have another set of works that posit that landowners fear that under democracy, they will lose social control over the landless and therefore the political control that they had until then. And yet some other works point out that landowners fear they won't be able to sustain the labor repressive mechanisms that have gave them access to non-wage, to cheap labor, but also to slave labor, and that therefore they will lose their economic control or their economic power. So in this paper and chapter, I share the same concern that some previous works that pointed out that even though these arguments work very well in a wide variety of settings, they are very troubling in some others. So for one, we know that highly unequal societies transition to democracy and that many of them do so early on. So for instance, Latin America is a highly unequal region that is very rich in immobile assets, and its cases of early transition, such as Chile or Argentina, are very puzzling in light of these existing theories about inequality, democracy, and immobile assets. Second, there is also evidence that landowners and landed elites have openly supported democracy at many points in times and in different regions. And this appears very clearly, for example, in the work by Rushmeyer Stephens, but also in the work by Mares on Prussia in the 19th century. Dan Ziblatt has a super interesting story on how conservative parties, which represented elites' interests, were in some cases the ones who pushed for democratization. And on Latin America, we also have Mike Alberto's work, who shows us evidence of land supporting democracy during the third wave of democratization. So in this chapter, I build on these different pieces of literature and made the case that it is not that surprising that these existing theories are not fully able to explain cases of democratization in highly unequal contexts, or why is it that under certain conditions, landowners will support democratization? Because they rely on two main assumptions. So the first one is that asset mobility is exogenous, and the second one, which is obviously very related to the first one, is that landowners identify uniquely with land-related activities. And this assumption is troublesome if we pay attention to historians' qualitative accounts on how all traditional landed elites oftentimes invested in other economic activities, not only in the developing world, but also in developed economies. They expanded towards services, manufacturing, transport, finance, and other activities. And this is something that also is very clear in the fascinating works on England by political scientists like Cheryl Hart-Bailey and Sumitra Jha. So in this paper, I will try to contribute to this literature by answering the question of whether land inequality enhances landowners' resistance to democracy by proposing you an alternative mechanism through which land inequality affects landed elites' calculations. And the argument that I will develop next breaks with the two assumptions I just talked about and proposes that these landed elites do not always identify only with land-related activities, and that in fact, it is in these contexts of high land inequality where oftentimes landed traditional elites decide to diversify from land into multiple sectors of the economy. And in turn, I will show you that asset portfolio diversification of landowners changes their political incentives, making them, for one, more supportive or less resistant to democracy, and secondly, more likely to participate in the democratic process and in democratic politics by running in elections to occupy positions at the national level, leaving aside local politics. So now let me walk you step by step through the argument that I make here. To understand why traditional landed elites decide to diversify their portfolios early on, but why some other landed elites decide not to do so, and what are the political consequences of this diversification strategy, we need to go back in history to the original moment when diversification actually became an option. So let me situate you in a situation or a context in a pre-industrial society that is in its early moments of transitioning from an agricultural economy into a very incipient modern economy, and a society that has not yet made its transition towards democracy. So during these very early stages of the modernization process, and with the advancement of something that I will claim is very important, which is the modern form of corporation, and with the emergence of new sectors of the economy, such as, again, incipient manufacturing, finance, transportation, and others, but also with the creation of an incipient domestic capital market, new investment opportunities started emerging for these traditional landed elites that had been so far only specialized in land. And I make the case that in this type of context, landed elites face the choice of either diversifying into all of these new activities or to remain specialized in their land-related activities. Of course, you have to think here that diversification is not a free strategy today, even if you think about your personal finances. And it was even less back then. So there are significant economic costs and risk attached to diversification. So moving into a new sector requires knowledge, skills, requires information, and it comes accompanied with a lot of uncertainty of not knowing how a newly created sector will perform. If it will be competitive, if it will grow, how prices will look like, and so on and so forth. Then the question is, why would some members of this traditional landed elite take such an economical risk and decide to diversify while others would not? Well, what I argue here is that the set of the landed elite that perceived a higher political risk at that point in time was the one that decided to start entrepreneurships in new economic activities, that is to diversify. And in the specific context of this pre-industrial society we are talking about, I specifically argue that whereas some members of the landed elite had a stronger perception that it was way too risky to hold uniquely land under a democratic system, and therefore had incentives to hedge such risk by diversifying their portfolio, there was other set of the landed elite that did not perceive that democracy was such a threat and instead remained specialized in land-related activities. And I make the case that risk perception of land tenure under democracy is associated with the exposure that these landed elites had to different levels of land inequality. So we know from an extensive literature, including some of the works that I just talked about, that landed elites are more fearful of democracy at higher levels of land inequality, because it is in these cases where they expect, again, to be expropriated, to be taxed, to lose social control, political control, and economic control in general. So following a similar logic, I argue that it is this set of the landed elite that was exposed to higher levels of land inequality that had more incentives to incur in this big cost, huge cost of hedging the asset-specific risk of holding only land through portfolio diversification. So I just talked about why elites diversify, but as I anticipated, I'm also interested in understanding what the consequences of diversification are. So then the question is, what happens once these landed elites diversify their investments? What are the consequences for their preferences over democracy and moreover for their political behavior under a democratic system? And we said that for these elites, portfolio diversification can work as a sort of insurance mechanism against the risk of holding land or uniquely land in a democratic system. That is, once landed elites diversify, democracy represents less of a threat for them, precisely because diversification is protecting them against policy volatility, including taxation or expropriation, as we mentioned before. But you can also think about different types of policies that could potentially hurt their profits in land. So overall, and against some works that posit that land will always oppose democracy, what I predict here is that once landowners diversify, they will be less likely to resist democratization than specialized landed elites. And I further argue that this portfolio diversification strategy also shapes their political ambitions because it will provide them with new incentives to push for cross-sectoral policies, that is, policies that benefit all sectors of the economy simultaneously, instead of sectoral policies that benefit a sector alone. And this type of policies can be, for example, the provision of general public goods, or policies that reduce transaction costs in the general economy. But, well, you can think about other types of policies that could potentially lift all sectors of the economy at the same time, vis-a-vis different policies that would only target a specific sector alone. And what I argue here is that different types of policies are typically more successfully pursued in different political arenas, and that this is precisely what generates diverging political ambitions for diversified versus specialized elites. So these cross-sectoral policies that, again, are lifting all sectors of the economy at the same time, for instance, are usually designed and implemented also at the national level of government. And this should create incentives for this diversified economic elite to start occupying positions at the national level of government, leaving aside local politics. As I anticipated empirically, I tested this argument in Chile between the mid-19th and early 20th century. And this is a very interesting case, I think, to test this argument during this period for several reasons. So the first one is that the Chilean landed elite was one of the most powerful ones in the region at that point in time. And this was precisely a time when this landed elite was experiencing a sustained growth due to the international demand of commodities, which actually, if you think, increased the cost of diversifying their investments into new sectors that they did not know how they would perform in the future. Secondly, because in 1852, this landed elite also started facing the threat of taxation to agricultural income for the very first time. And this happened with the introduction of the Contribución Agrícola, which implemented a 7% tax on agricultural production. Third, around that time too, in 1854, this landed elite experienced the creation of a trading capital market at the domestic level. And this happened with the passage of the Joint Stock Companies Law, which enabled the incorporation of firms by shares for the first time. And with this, as I will claim, the possibility of domestic diversification for the first time. And overall, what we observe in Chile down the road is that this country pursued a very gradual transition towards democracy, which was done by a reform, as several authors, such as Valenzuela, point out, making this, I think, an interesting case to study how in early stages of the modernization process, elites' investment strategies shape their attitudes towards democracy, but also towards shape their political behavior in general. So in my research strategy here, I will precisely take advantage of the fact that the 1854 Joint Stock Companies Law enabled these investors to diversify for the first time. And this law, I claim, was exogenous to these elites' interests and their behavior. So there are historians and lawyers that point out that this is a typical case of international diffusion of modern corporate law, which was already widespread in all over Europe, certainly, but also in many other cases and countries in Latin America. And second, this law was a response to the abolition of the Bilbao Ordinances, which was a set of regulations on many multiple aspects of commerce and commerce and other things. And these ordinances were dropped by then. So they started passing different laws, such as the Joint Stock Companies Law, to replace the Bilbao Ordinances, which again was a legacy of the colonial rule. The important point here is that the passage of this law allows us to observe what happened at that very, very original moment when these landed elites were allowed to start making diversified investments in a systematic way. And let me make a quick parenthesis here. I am not claiming that before the passage of this law, these elites could not diversify their investments. In fact, they did so with very rudimentary strategies, such as marriages. So individuals would marry this people from other families that had investments in sectors that were different from the sectors where they had their own investments. Families would diversify their investments by marrying their sons and daughters too. What I'm claiming here is that the passage of the law allows both individuals and families to pursue this strategy in a more systematic way. Now let me give you a quick glimpse of the data that I used to test this argument. And let's start by discussing how I reconstructed these economic elites' individual asset portfolios to measure precisely their level of diversification, or the extent to which they had participation in multiple sectors of the economy. And I measure this variable, which is on the first stage of my argument, the outcome, and on the second stage, the independent variable, as the number of sectors in which an individual has participation on a certain year. And to produce this measure, I reconstructed the asset portfolios of around 55,000 individuals, including the full set of members of the economic elite between 1849 and 1907. And for this, I combined two sources of data. On the one hand, information on who were the shareholders and the directors of all the companies that were created during that period. And this data I gathered from the daily official bulletins that published information on all the firms that were incorporated on a daily basis. Using these sources, I gathered information for around 32,000 individuals. And on the other hand, I compiled information on landowners using the 1852 land census, which is the last land census that was produced in Chile, and that gives us very precise information on the names and last names of all landholders, the size and the agricultural income that they obtained from their land plots. So, sorry. There. Let's take a look for a second at how diversification evolved across time since the approval of the 1854 Joint Stock Companies Law. So these network graphs that you are looking at here plot a random sample of the individuals or landowners, which are represented by the blue dots that you can see here, and their connections to different sectors of the economy, which are represented by the red dots. And what we see here is that diversification became a more and more common strategy for these formerly unsophisticated investors that had only participation in land-related activities as we get into the late 19th century and the early 20th century. Then to measure land inequality that, remember, according to the argument that I presented provides incentives for elites to diversify, I calculate the Genie coefficient by department based on individual level data on agricultural market income that I gathered from the same 1852 land census. So maybe here, yeah, I'm calling it land inequality, but this is agricultural land inequality or agricultural income land inequality, because I am measuring it using the agricultural income that each individual obtained from their production in land. I don't want to spend much time on this, but I also use historical censuses and statistical yearbooks to construct departmental level measures. But yeah, let's stop here because this is important. So to examine the effect of diversification on elite support for democracy, I will rely on the roll call vote of the 1872 enfranchisement reform proposal that was passed in the lower chamber of Congress and proposed to eliminate the income requirement and to enfranchise all literate male. You have to note here that this proposal did not pass until 1874, but there was no roll call vote then. So this is the closest that we have to measure support for democracy at the individual level. Finally, to look at the effect of diversification on elites' ambition to occupy positions at the national level instead of the local level, I combined the individual time series on economic elites that I talked about with a panel I compiled with all members of Congress and the executive power, but also members of local political elites, which I gather from different payrolls. Okay, so let me show you now some of the main empirical results that I present in the paper, and let's start with hypothesis 1, which stated that landed elites embedded in high land inequality contexts are more likely to diversify their asset portfolio than those in low land inequality contexts. So to test this hypothesis, I estimate a simple OLS model using the time series I constructed, which allows me to follow the investment trajectories of the entire population of landowners that were present in 1852 throughout the years, okay? So the model here is estimating the level of diversification of landholders at the individual level. These landholders are embedded in a certain department and province, and I'm looking this on a yearly basis. I'm also using as an independent variable here the level of exposure that they had to land inequality, and this again I measure at the departmental level using the Genie coefficient that I just talked about. And I also incorporate as a control the income levels that these individuals had on a yearly basis. You have to remember here that my theory indicates that land inequality will affect the behavior of the landed elite. So these are the richest sectors of landowners who are the ones that have the most to lose here. But in the data that I gather, I am pulling information for all landowners. So from the smaller ones to the largest ones. So not to lose the richness of the data, I include the interaction term there between inequality and income, but if we subset the data, the results in general hold. So as expected, land inequality significantly affects richer landowners' predisposition to diversify more than it affects poorer landowners. So the plot here is providing us a notion of the substantive effect of land inequality. It shows you the predicted values of individual level diversification across all possible values of land inequality measured by the Genie, only for the richest 5% of landholders. And within this group, moving from a department that is very, very equal, let's say, or relatively equal with a Genie of around 10, to the most unequal department, which had a Genie of 90, actually I think it was 86 more precisely, triples the average expected level of diversification of a landowner. And I think this is a substantively speaking interesting move, even if the numbers that you're seeing here on the y-axis are very small. But you have to remember that these are average expectations that are affected by the fact that most investors in my sample never ever diversified because they were just too small to diversify. That is, they did not even have the disposable income to pursue a diversification strategy. And what I will try to show you next in the next slide, I will try to convince you that these changes in diversification made big differences for elites' political behavior in terms of their support for democracy and the way in which they participated under a democratic regime. So I would like to show you now some results in relation to hypothesis 2, which said that diversified elites are more willing to accept democracy than those elites specialized in land. So this figure here really quickly is showing the predicted probability of voting in favor of the 1872 enfranchisement bill that proposed, again, to extend suffrage to all literate male. And it is showing that the probability, this probability, yeah, as you can see here, at different levels of diversification. The plot is based on a simple linear probability model that is estimating the probability of voting in favor of democracy, so in favor of expanding franchise, as a function of the level of diversification that Congress members had and other individual and district level controls that are relevant here. And what we see here is that Congress members with more diversified portfolios are increasingly more likely to oppose democracy. So this probability is around 75% for the most diversified congressperson, okay? 75% of voting in favor, right? Here's the probability of voting in favor of extending suffrage. In contrast, we have a specialized Congress person whose probability of voting in favor of this reform is under 50%. And this difference, again, is substantively interesting because we can observe that there is a big difference in the probability of voting in favor of democracy for those who were diversified. You have to consider, and this is important, that this roll call vote was almost a tie. It was a 28-29 or 27-28, something like that. So the baseline probability of any random congressperson voting in favor or against is already about 50%, okay? So that's why the numbers are already very high. What is important, again, let me make this point, is that diversification increases the probability of accepting democracy or voting in favor of the reform. And now I would like to stop here for a second to put these results into context and to discuss the implications that they have for historians' interpretations on how the 1874 democratic reform came about. And let me first mention the points on which historians usually agree. So first, they all agree on that early democratization in Chile was not a response to pressures from lower income sectors. This is a time when lord-peasant relationships in Chile were intact and there were no direct pressures from below. So there are no popular sectors looking for the right to vote. Historians also agree on that democratic reforms in the 19th century in Chile were instead instigated from the upper income sectors. But then the thing is that there is a part of the disagreement among historians comes from understanding why would upper classes support the expansion of franchise and which were the splits within the elite or within these upper income sectors that actually supported democracy. So let's make a parenthesis here. To give you a bit more of context, between 1866 and 1876, we have in power a coalition government between the liberals and the conservatives. And these two parties, as you can imagine, would have otherwise been at odds with each other on fundamentally everything, particularly state church matters, but on everything. But they came together under special circumstances to defeat Manuel Montt's personalistic government. So discussions in government about, in Congress, about the possibility of expanding franchise started in the 1860s, and these were mostly promoted by members of the Radical Party. But all of these conversations were in a way shut down because the opposition did not have the numbers in Congress. And it was not until 1872, and this is the data that I just showed you, when the numbers started adding up so that finally the reform was passed in 1874. So how did this happen? Well, here's where the disagreement comes up. There is a first group of historians that point out that the 1870s reform was a win from an emerging bourgeoisie that was represented mostly by the Radical Party, and that their main objective was to constrain the power of the executive. And this group was in theory comprised by mining elites, fundamentally, and medium-sized landholders that had gained a lot of economic power because of the commodity boom, but that wanted more political power and to pay less taxes, okay? So the problem with this first set of counts is that they miss the fact that members of the Conservative Party had actually accepted the passage of the democratization reform and had supported it. So then we have other set of historians that underscore the role of conservatives on this process. And in these accounts, there is no conflict within the elite except for the conflict about state church matters. And this is precisely the reason why supposedly some members of the Conservative Party leave the ruling coalition with the liberals and propose to extend franchise or accept to extend franchise. However, I make the case that these explanations miss another fact, the fact that the opposition had been proposing for years to extend franchise since the 60s, and that they had shown discontent with the ruling coalition in different opportunities. Also, these accounts cannot fully explain why only some conservatives left the ruling coalition, but many others stayed in the coalition. So I think that in a way, the results that I presented here make justice to both of these explanations. One, there are opposition groups, fundamentally the radicals, where the mining elite and the medium-sized landholders were overrepresented, that have been the main proponents of democracy since the 60s. But it is also true that the conservatives ended up spearheading the democratization process in 72. So again, going back to the original argument, it was only a part of this conservative landed elite that supported democratization. And it was the one part, as this is what I find, that it was the one part that managed to diversify its assets in other sectors of the economy. And finally, let me show you some results in support of the final hypothesis, which indicated that diversified economic elites are more likely to seek positions in national government and less likely to do so in local government than specialized elite. I'm going to show you only results on at the national level today, however. Okay, so the figure here is showing the predicted probabilities of being a Congress member across all possible values of diversification in my sample. And this analysis, again, is drawing on the elite census that I crafted that spans between 1854 and 1907. And so the model here is a logistical regression model that is looking at the probability of being a Congress member as a function of level of diversification. And as you can see, diversification has an increasing significant effect. So the expected probability for a specialized elite member is barely above 10%, whereas in the highest level of diversification is about almost 90%, which is obviously very high. So in line with the argument that I propose here, this means that diversified business people are usually more likely to look after their policy interests by participating in national politics. Okay. So let me summarize what I have shown you here today. Well, first, that given new investment opportunities, traditional landed elites' decision to diversify hinges on their perception of risk associated with land tenure under democracy. So basically, those exposed to higher levels of land inequality were the ones who perceived a larger risk and pursued diversification. Second, I also showed you that portfolio diversification can shape economic elites' preferences and behavior, making them more supportive of democracy and more likely to pursue careers at the national level. So these findings, in a way, contradict some existing works which suggest that landowners will always oppose democracy and land inequality is an impediment to democracy. But they also show that, against what one would expect, landowners' fear of democracy makes them more participative in democratic institutions. And finally, let me wrap up really quickly with some implications of the work that I presented here, but also of the larger project that I am working on. So the key takeaway for me is that standard political economy theories overlook the fact that economic elites are oftentimes diversified, and therefore they cannot fully explain, for one, their individual preferences and political behavior, as we have seen here today. But perhaps most importantly, and this is something that I develop further in the book, they cannot explain how distributive conflicts evolve in settings where this sector is predominantly diversified. So overall, the point that I make, I hope is intuitive and simple, and is that the presence of a more diversified economic elite can have important distributive consequences. As I showed you here, it can contribute to democratization. At the same time, it produces imbalances in democratic institutions, because remember that I showed you that diversified elites have incentives to capture the national level state apparatus. But as I also show in other parts of the book project, the presence of this type of elite can help improve the provision of public goods. So there may be some positive consequences of having a more diversified elite in place. Okay, so that's it for today. Thank you very much. And I look forward to your questions, comments, and also suggestions.
Thank you, Victoria. That was Super interesting. I'm going to ask a couple of questions, couple of them channeling Fernando Bisado, and then I'll give you a chance to answer them, and then I'll hand the baton to Fran. One somewhat grumpy question from a democracy guy. So this one's not Fernando. Not that Fernando's not a democracy guy, but is the franchise expansion of, is it 1872? Is that really democratization? Chile's suffrage remains really restricted well into the 20th century because of literacy requirements. So how scary was an extension of the franchise to, what was it, 10, 15% of, it was still very, very, nobody would call Chile in 1870s a democracy. It was still an oligarchy system. So that my question is whether this is a real test of the argument. Couple questions from Fernando Bisado, one of our star grad students. One interesting question he asked is what exactly shapes elites, landowners' expectations about what happens under democracy in the mid-19th century? I mean, there really aren't any democracies in the world. France maybe has just become a democracy in the early 1870s, but there are very, very few democracies in the world at this time. So how, in a pre-democratic era, do these guys have clear expectations about what democracy is likely to bring in terms of landholding inequality? It's easy for Jim Robinson to speculate in the 21st century, but how do these guys have such clear expectations about the consequences of democracy? And pushing it a little further, the argument is that is what induces landowners to democratize. It is an explicit search for insurance in a democratic world that induces these guys to diversify. And I just wonder whether in a high, this is actually Fernando's question, whether in a high inequality context there may be other motivations. For example, these guys in a very high inequality context, maybe it's really difficult to buy certain services, say transport to the market. So diversification is an effort to acquire services in-house that are difficult to purchase. So what's the evidence that we know these guys are actually making this calculation about insurance under democracy? Another grumpy question, this grumpiness is from Fernando, not me, is whether diversified landowners are still landowners, or whether they've become capitalists, in which case their behavior is much more consistent with traditional theory. I'll stop there. Great talk.
Shall I answer this set and then we move on? Or okay,
yeah,
perfect.
Answer those, and then Fran will add some more questions.
Oh, amazing. Is it possible to have a back and forth, or he cannot speak?
Unfortunately, I can try to channel Fernando, and he can send.
No, it's fine. It's fine. It's fine. It's fine.
Yeah.
I was just wondering. Okay, so the first question was about, is the 1872 reform actually a step towards full democratization? And the answer is, I agree, no, it's not. It's just a very small step, a baby step towards opening the process, but we could not call Chile a democracy at all after the passage of the 1874, actually, because remember, what I'm using here is the 72 roll call vote, and at that point in time, the reform did not pass, because again, it was almost a tie. It didn't even go to the Senate. It passed in 74. But actually, because of that, I think that it is a nice test for the theory. It is a nice test to see how the preferences and their willingness to accept democracy or to oppose to democracy less was changing for these traditional elites. So absolutely, I am not claiming that in 72/74 Chile became a democracy, and that I have prove on how landholders that diversified their investments were the champions of democracy or whatnot. I am just saying these landed elites were exposed to certain political and economic risks that pushed them towards diversification, and the diversification of assets made them feel that democracy would not be such a threat, and little by little they changed the way in which they felt about democracy and started opposing it less. So that's the first question. And then Fernando had a set of questions. So let me check this. What shapes the expectations of landholders on what happens under democracy, given that there are not that many democracies around the world? And this is a very good question, I think. Not only for me, I mean, it's a general question for works on early democratization, where we are all assuming that traditional elites have certain expectations and have certain predictions about how their lives would look like under a democratic system. As a matter of fact, not only that, Chile back then was a very closed economy. They did have obviously commercial and trade relationships with countries in Europe, but the level of information that they would receive from abroad was very little, or smaller than the one that we usually assume. I think that they did realize that things were changing, and that if the democratic game would open, they might lose. I think that they did not know exactly what was going to happen. They just took a bet. They took some risks, and the ones that felt that it could be more risky decided to pursue this diversification strategy. But I don't think they have very clear expectations on how they would look like, how much they would be taxed, how much they could lose, how many profits they could make. They knew that things were changing, that they might lose power, that they might not be able to decide to make decisions as they had been deciding until that point in time, and that could look back bad for their profits. That's a bit of the argument that I am trying to make. But I am interested in talking to Fernando more about this, because I am thinking empirically, how can we possibly nail down the way in which these elites were thinking on the late or second half of the 19th century about the future of their profits under a democratic system or an oligarchic system. And then he had other questions. Are diversified landowners still landowners? Well, I think they still are. I think they still are. Like these families in general, they never drop their assets in land. They keep diversifying towards manufacturing, services, especially finances, but they never drop their land holdings. And this is, I think it's something very interesting, because even during periods of time when the international prices of commodities were not looking very good, they don't sell their lands. They keep they keep being landholders. This makes me think that, and this is something that we can also talk about, maybe an interesting test that I could do, but I don't, is taking a look at what happens when the proportion of their assets changes within portfolio. So what happens when manufacturing becomes 50% of your portfolio rather than 30, and so on. So that is something that with this data we could actually test.
Fair. Do you want to follow up?
Sorry, was there a...
No, I think that's good. But we snuck Fernando in the room to follow up. So
hi, Fernando.
Yeah.
Nice to meet you.
Oh yeah, hello. Nice to meet you too. This was very nice. Thank you, Steve. I think that on the last point, but actually on both points, I think this conversation is just, I was trying to understand the terms of the conversation a little bit more clearly, right? So in the first step, when we talk about what is democracy, in the literature, democracy has a very specific meaning, which is changing who the median voter is, right? And that has a very clear implication for taxation. And so if you go and read what the evidence in some of this work about the historical political economy of democracy, they will show people talking specifically about that, right? And so that is what I was trying to kind of like, so what is democracy that these people are fearing? Are they fearing kind of like a change in the level of taxation because the median voter is going to change or something like that? So that's what I want a little bit more clarity on what democracy means so we can empirically know what we should be looking for, because I bet these people would be on the newspaper in Santiago writing about and saying this is going to be a terrible thing, right? Because they did in several other contexts. But just to push back on the idea of these people are still landowners because they still own land, also consistently with the theory, though, their assets do change, right? They become a more mobile, for example, because now they are also industrialists. Their preferences also might change because now they have more connections in the city. And so I'm still unconvinced that these guys who diversify are not just, they have just not become capitalists. And therefore, what we're observing is they behaving as capitalists. But again, great work. I think in that case, the test you propose would be just excellent, right? Like, because we're seeing, if we compare someone who has somewhat diverse portfolio, but is still primordially a landowner, this guy should be still quite against democracy. But the guy who still owns land, but whose assets have diversified, should have become a strong Democrat. And if that is the case, then I think it's quite interesting, this idea, because in the story is, well, diversification changes preferences, and therefore land inequality may give birth to democracy through this means. So super interesting.
Thank you, Fernando. Can I say something? Yeah, I don't have it here, but I would like to show you, well, in yet another chapter of the book project, I tried to nail down the last part of what you said. So are these guys landowners, or have they transformed into capitalist elites, or can we call them diversified elites, as I call them, or landowners, capitalists, and merchants, as Radcliffe and Zeitlin said so many years ago, right? Like they are everything at the same time. And what I do there is I look at how they support different types of policies. And I think this is really interesting. I find that those that have more diversified portfolios, even though some of these portfolios, as you point out, were more biased towards certain sectors rather than others, they are more supportive of types of policies that provide public goods. And specialized landowners, they are exactly the opposite. They are always supporting and pushing for policies that are very sectorial. And this I look by looking at roll call votes, but also exploiting subnational data on censuses, as you can imagine, of public goods, the roads and literacy rates and so on. But yeah, point well taken. I mean, yeah, thank you. We can continue the conversation later another day.
Fran, ball is yours.
Okay, I was so fascinated by this exchange that I lost track of a few more questions from the audience. So let me try to weave in my questions with theirs. So first of all, Victoria, this was the kind of talk that I love when something you say raises a question in my mind, and I think, oh, now I've got her, and then you answer in the very next minute, and I think, oh, she's got an answer for everything. But
I don't.
But I do have. I mean, I tried to break up your argument in my mind into steps, and so the step that like what difference does it make when they diversify? Seems intuitive. It seems like you've got great evidence for this, and I actually be interested in other chapters about the provision of public goods. So I mean but I think that I was still stuck on the question of why the diversification. And I, again, I was anticipating, oh, but they intermarry. I read, Zeitlin and Radcliffe too, and they are diversified. And so, but you sort of addressed this, but I'm just wondering whether I'm supposed to understand the joint stock company law as a is an opportunity for a political scientist to, is this an empirical opportunity to test this? Or are you actually thinking that institutional structures facilitate this? Because then the counterfactual is, what about in context and in places where the institutions did not facilitate diversification? I'm curious, you told a wonderful, this is a wonderful, rich account of Chile, and Chile is a great case here. But you said, but I gather the book also includes Argentina, and I'd love to hear a little bit more comparatively. I mean, I was thinking as I was listening to this about the Paulista coffee planters who fuel the industrialization of Sao Paulo. And so, I mean, is there any place where landowners don't diversify? And so I have a general question about context. So we have a question from the audience about whether elites in Chile and Argentina were more likely to invest and diversify in their local stock market when the opportunity arose, because their incomes were not as tied to the sale of primary resources and commodities to Europe as in places like Peru and Bolivia. Do the stock market stand out in terms of participation in the account? So is there something different about the degree of integration and stock market integration between the cases that you've discussed here and other countries in Latin America? And so this sort of feeds into my comparative question about how different do you think Chile is from other cases in Latin America? I mean, the answer can be yes, and that's why democratization is precocious, or at least the expansion of the franchise is precocious. But we also see a 1912 expansion of the franchise in Argentina. So I'm going to stop there, and if we have time for another round, Steve can pick up some of these questions from the audience that I apologize. I seem to come in all of a sudden at once. Go ahead.
Thank you, Francis. Great, thanks. Okay, so the first one on the joint stock companies law. I am not claiming that this is an exogenous shock that gives me like a, like smoking gun type of test that allows me to make any very neat causal inference out of this. I think it's a very interesting opportunity, not only in Chile, in other countries where firms buy shares did not exist. This gives investors or business people the chance to systematically diversify their investments by buying shares in different companies that were operating in different sectors of the economy. And even though they could diversify with these rudimentary strategies like marriage before the passage of this type of laws, elites could be diversified up to a certain extent, but they were not extensively diversified. So imagine you're a landowner and you decide to, or landwoman, and you decide to marry someone that has participation in finance, for example. Then you would be diversified into two sectors, let's say, because you are in a marriage now. Say that you pursue a family type of diversification strategy. You can marry your 4 sons and your 2 daughters with business people in 7 different sectors, perhaps. But the passage of the joint stock companies allows individuals and families to massive diversify. So this is the first time when they can actually pursue a strategy of having an asset portfolio that is with participation in multiple sectors of the economy, and also to strategically think how much participation they want to have in each sector of the economy. Because if you marry with someone that has a bank, for example, then yeah, I mean, you own a bank maybe. But with the passage of the joint stock companies law, again, people can think, okay, I want to have like 50 shares in this company that's in X sector. I want to have 60 shares in this other company that is in this other sector, and so on. So I think this is different. It's complementary, certainly. And I would love to look at marriages, but unfortunately for Chile, I wasn't able to gather that data. I look at family trees for some like very specific cases, but not systematically. I have that for Argentina though. Okay, and then like a very interesting question about how we think about Chile in comparative perspective with other countries in the region. And here I'm going to talk a little bit about Argentina, which is my other case study in the book project that I am working on. So two things to say here. One, there is variation in the extent to which elites in general diversify at the country level, but within country, there is also variation in the extent to which economic elites diversify. So for instance, the case of Chile is a case where, generally speaking, the landed elite diversified early on, and they pursued this strategy of being invested in multiple sectors of the economy. This did not happen in Argentina. In Argentina, the landed elite remained specialized in land, and what we observe instead is the emergence of a different manufacturing elite and multiple sectoral elites, which later on in the 20th century start competing with each other. So it's a very different situation. That does not mean that within Argentina, we don't have business people that also pursue a diversification strategy. So I am interested in these two levels of comparison. At the country level, to observe how the dominant elite, or the extent to which the dominant elite is diversified or not, and what are the general consequences of that, but also to understand or to explain what the individual incentives are of business people, and in that regard, to observe or to study variation within country and across individuals and families. Just expanding two more words about Argentina versus compared to Chile. Again, so in Chile, landed elites diversify early on. In Argentina, this does not happen. And what we observe later on is that in Chile, as I showed you briefly, because the data that I showed you today is only for the late 19th and early 20th century, these diversified elites occupy or start, occupying positions at the national level of government, whereas in Argentina, the opposite happens, right? We have an economic elite that has a very hard time at collaborating with each other. There are lots sorts of intra-elite conflicts that prevent them from creating a strong and credible elite party that can run in elections and win elections systematically. So differently from the case of Chile, we have sectorial elites that compete with each other. They do not, or they have a harder time at running in elections and winning positions at the national level of government. And this changes the outlooks of both countries. As I said at the end of my presentation, the dominance of a more diversified elite can have some positive consequences at the national level, and that we can observe, for example, in the provision of public goods. But on the other hand, the diversification of a dominant elite can also have negative consequences. And what I find there is that whereas in Chile, the elite, by occupying important positions at the national level, are very successful at providing public goods that were helping them improve their profits in different sectors of the economy. They are also very successful at blocking redistribution at different instances. Well, in Argentina, the intra-elite conflict sort of produces a situation where redistribution at different points in time is an opportunity that is taken. So those are my comments on the comparative question.
Okay, I'm gonna toss out a couple more questions and then hand the mic back to Fernando, who's got an additional question. Sorry, we've been dealing with this guy for 6 years. He just so here's a question from David Silverstein. He asks, you make a really interesting argument that the move towards diversification creates incentives for participation in national politics. And David asked whether the causal arrows might be reversed, whether in fact participation or involvement at national level politics may expose landowners or their kin to ideas and opportunities for diversification? Or if I rephrasing that somewhat, might both of these processes be rooted in something else, whether it's global integration, technological change, or as Sebastian Carasai points out in his question, this is a period of pretty rapid expansion of liberal ideas, public education, secularization. Might the move to diversify simply be rooted or driven by greater exposure to liberal ideas? Another question, just very quickly, comes from Ivan Ferraz, which is to point out that there was quite a bit of risky diversification in Brazil during earlier periods, during completely undemocratic periods, even the colonial period. Is this really the first explosion of diversification in Chile, or were there earlier periods, non-democratic periods, in which you see this sort of diversification? Fernando, you can jump in now.
Yeah, my question is related to that, in which Steve mentioned it before, but I just want to make sure that we do talk about it, which is that it is consistent with your hypothesis one, the scenario in which these guys live in this very unequal local economies, therefore they really cannot really buy things from the market, right? And so they need to do it themselves. They need to, there's just not a complex enough local economy for them to be doing things with others. So if they need to then do everything themselves, you would expect these guys in more in unequal context to diversify independently from the threat from democracy. And therefore you would have an observationally equivalent outcome, which is more diversification in context with more inequality, if inequality kind of limits the size of the market. And therefore, it's like an alternative explanation for this finding that is independent from the kind of incentive that you were talking about. So I was kind of curious to see looking for the evidence that this was really about safety and not about something else.
Thank you for the questions. So the first one was on the possibility of reverse causality between sitting in Congress and diversification. So on this, what I do to tackle this problem and to try to pin this down empirically is I collect as many data as possible, like for the entire history, to produce a time series that actually allows me to look at what happens from the very beginning to the very end. And so how the diversification trajectory is actually impacting the decision to sit in Congress or to run into politics at the national level or the local level, as I also investigate. However, that said, this can be seen very clearly during the first stages of the diversification process, because there you can identify who's diversifying first and what they do once they diversify in terms of their political ambitions. Later on down the road, absolutely, people that sat in Congress and that were participating in national politics certainly took the advantage whenever they could to buy shares in a firm or another, to make a contact with one person, with one family, and with other members of the elite to buy shares, or again, to buy participation in different companies. So there is certainly a feedback loop. What is interesting is that at the beginning, again, of the times when diversification becomes this systematic investment strategy, we can observe more neatly the direction of causality between diversification and participation in politics. Second question, on the expansion of liberal ideas at that point in time and how this affects diversification of these investors. This is a really interesting question. I would like to look into this. Now, however, what I think is that if all of these elites were exposed to these liberal ideas, and they certainly were exposed to these ideas, partially because they spent half of the time traveling to Europe and like mingling in social clubs and at parties together. So they were all involved in this sort of network of ideas that was flourishing at that point in time. Why is it that some of them diversify and the others do not diversify, right? Elites that at the same income level, they pursue different investment strategies. And I think that is puzzling. And that's what I'm trying to look at here in this paper. There's another question about Brazil. Francis also mentioned something about Brazil, and I do not explore Brazil in my book manuscript. I would love to know more about it. So on the specific case, I don't have much to say, but there was a question related on whether there are previous periods of diversification from the one that I am looking at. And this goes back to the issue of using marriages as a strategy of diversification for colonial families and for the heirs of settlers. So my answer to that is yes, there was diversification. It was done through marriage. It's very difficult to look at it empirically, but with some case studies, and this is something that I develop, and I need to, I would love to have more time to talk about some specific qualitative cases on families that pursued this strategy via marriages too. It is a complementary strategy, marrying to diversifying via buying shares. And Fernando had a point on how inequality can limit the size of markets and how this can be actually the mechanism that is linking inequality to incentives to diversify investments. This is interesting, and I have to acknowledge here that I agree on that. I am not nailing down the mechanism there. In the mechanism on the relationship between inequality and the decision to diversify. So yeah, I mean, the size of the market could be a possibility. At the same time, are all these investors or landowners, 19th century landowners, exposed to the same levels of market size? So they were operating on the same market. So again, a bit my question is, but why is it that some take this risk? It was a huge risk back then. Can you imagine investing in buying shares in a company that you had no idea? These were the very first companies that were being created. These people were taking huge risks, but not all of them were taking such risks. So that's, again, what's puzzling to me. Yeah, it would be nice to talk more about that. Again, I acknowledge I am not nailing down that part of the mechanism. It's very difficult to tap that down. Yeah, leave it there.
Okay, I think I need to close, but before I do, just let me thank Victoria Paniagua for a outstanding presentation and a great session of great dialogue and great answers. Really look forward to your book coming out. I think it's going to be really very important, influential work. So thanks for taking the time. Dr. Class followers, we look forward to seeing you again in the fall. We're not sure on the format, but we will be in touch. Everybody stay well. Take care.